Corporate finance practice problem using OneNote. Convertible bond as it could be seen on an exchange. Get ready, it's time to take our chance with corporate finance. Here we are in OneNote. If you have access to OneNote, would like to follow along, you're not required to, but if would like to, we're in the icon on the left-hand side in the Practice Problems tab, down in the 1919 Convertible Bond on Exchange tab. Also note, when using OneNote, look at the Immersive Reader tool. Our presentations will also be in the text area with the same name, same number, but with transcripts. Transcripts that can be translated into multiple different languages and either listened to or read in them. Closing the icon, we have our information up top, calculations on down below. We're looking at the convertible bonds, those being the bonds with the conversion option, allowing the investor to convert them to some share of common stocks if they so choose. We have the convertible bond quoted on the New York Stock Exchange bond market at 75. That's kind of the new thing. That's how you might see it listed, and that would basically mean 75% of the par value, which is 1,000 here. If it was 80, you would say 80%, and so on. If it was over 100, like 105, that would be 105% of the par value, and so on. The conversion ratio is going to be 20. The common stock price is going to be 35, and the par value is at 1,000. That means the conversion ratio means how many shares of stock we could get. So if we choose to convert the bond to stock, we would get 20 stock for it. And the common stock price, meaning the price of the stock that we could convert to, is currently trading for and therefore has a market price of 35. Par value, not the market value, but the par value is the 1,000. So the convertible bond price, calculating the convertible bond price now, we're just going to take that 1,000 and then we're going to take the amount up top that it was quoted at, the convertible bond quoted on the New York Stock Exchange at 75, and just make that a decimal, 75 divided by 100 in essence, giving us the 0.75 or 75%, gives us the 750. Then we'll take a look at the conversion value being that we have the 20 shares that we could convert the bonds to. So we're trying to think now then, what's going to be the value of this thing? Remember, this security is a little bit different than other types of securities. It's a little bit more complex, so we can kind of compare it to securities that are less complex, that are easier to kind of know the value, at least on a market basis from. That meaning we could look at it from the stock angle side of things and say, what if we converted it to stocks? Then what would be the value of those stocks? Because the stocks are a more simple type of investment, and we know what the value is because it's trading on the market. So we got the conversion to 20 shares, and the common stock price we know is 35. So the 20 times the 35 would give us the 700. So then if we look at the conversion premium, that means the convertible bond is currently selling for 750. And if we were to convert them and then value the stocks, it would be 700. Therefore, the premium meaning if we bought the bonds and then converted them to the stocks, we basically overpaid by that, in essence, $50. However, of course, the point being is that now we have the bonds and we have the option of converting, allowing us the benefit of the upside while having kind of a cap on the downside, because we still get to value it as a bond even if the conversion option does not become relevant, does not become useful. So the stock price for the conversion, when does the stock price for the conversion equal, in essence, the bond price? If the convertible bond price is 750, the conversion ratio at 20, we can then determine what the stock price needs to be, which would be the 37.50. So in other words, if I basically pull out the trusty calculator, we've got these 37.50. If we did our calculation up top with the 37.50 instead of the stock price at the 35, we said the 37.5 times the 20 shares, that would give us our 750, matching the convertible bond, which would result in the conversion value, in essence, being 0. That would result in the conversion value being 750 and the conversion premium then, in essence, being 0.